Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Wednesday, October the 4th, 2017, and this is the Daily Report for gold and silver. Mixed bag in the precious metals, with gold trading higher on the day, up almost $3, closing at $12.7750. That is a net gain of about $2.90. And silver trading off or lower by 4 cents today, closing at $16.60. That is with modestly lower prices. In the dollar index, down 13 points at 93.28. Traders, today for the first time in some time, we are witnessing the market closing modestly higher on the day, with December futures currently fixed at $12.7760, a net gain of approximately $3 on the day. What is unusual about what we are currently witnessing in terms of price action is that since this market has been in a decline, meaning the first week of September, after trading to a high of 1363, when we look at the series of candles in the decline, there has only been one other time period in which we had this market open and then close higher for 2 consecutive days. We have only seen this occurrence one other time. And during that occasion, we actually witnessed a pretty strong false breakout in that we had a variation of a Three River Morning Star. We could also look at this as a piercing line pattern, although a weak one because of the size of this green candle. Nonetheless, we had a strong confirming candle, and this is where we actually got chopped up for a couple of dollars because we did get confirmation. It did occur at a logical point to look at the market, which was a 61% retracement and then bouncing higher, but it was to be very short-lived, only to break through that and actually break below even the 78% retracement, which rests at approximately 1280. I still believe that there is a pretty decent probability that we might see lower prices. If in fact we do, I am looking for a test of approximately 1260. So traders, nonetheless, we do have to be cognizant of the fact that these last 3 candles have unfolded in terms of a straight candlestick pattern as a Three River Morning Star variation. The reason that I am labeling this a variation is you would really like to see this green candle, instead of having a long tail as we are currently seeing it exhibit, have a long real body, something like this. And then, of course, you would look for the following day to see a confirming candle. A confirming candle would always be a green candle with a higher high and a higher low. But that being said, there are a few patterns that we have found can be extremely insightful in terms of giving us an indication of a key reversal, a pivot point. One of those is an engulfing bullish pattern. The other one is a piercing line, and we talked about this a little bit. And yet a third key pattern would be the Three River Morning Star, which would look something like this. Color is not important in the star, but it must be a small bodied candle, followed by a star, and then our green candle on the way up. And of course, you would need to have a confirming candle before taking that call. A confirming candle for a Three River Morning Star would be a green candle following the last green candle of the pattern. So traders, although we have seen the beginning of a potential bottom forming in gold, I believe it is much too early to act upon it, and we still need technical confirmation. And traders, of course, the key to finding a bottom in terms of gold pricing and a conclusion to the current correction has to coincide with the dollar finding some strong resistance and beginning to track back lower. Because when we consider this last move down in the dollar, which has been prevalent throughout this entire year, this is one of the primary fueling factors that moved gold to higher pricing and gave gold prices such a dynamic rally. We did hit this bottom at 91. The dollar had been moving up, and because of that, we saw pressure in gold. That's when gold started to trade lower. But we do have some real potential resistance at 94. Currently, we're at 93.28, so we have backed off that price, and that would correspond to roughly the area that we have been looking at approximately 1285 to 1265 as a point in which we could find support for gold. But as I said, for right now, My recommendation is to maintain your neutral stance and actively await our next long position. Traders, the focus on today's report is to talk about candlestick patterns that indicate a key reversal or a pivot point. And to that end, we have seen the first signs of a potential bottom in the market. As you saw in today's video, we lay out what are the necessary components for us to actually act upon that move. And I do believe that we might still be a little bit early in terms of finding the end of the correction in gold. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.